traders' interest in risk assets seems to resume rising just after the US inflation report, which unveiled a slowdown. Traders decided to open long positions in the stock market. Not so long ago, the stock market quote slumped to extremely attractive levels. Today, the positive sentiment could be boosted by the US retail sales figures. And let us switch to the events that will attract traders' attention early next week. Only from Tuesday, the flow of macroeconomic data will start influencing the market situation. During the Asian trade, the Reserve Bank of Australia is going to disclose its recent meeting minutes. At this meeting, the regulator raised the benchmark rate by 25 basis points instead of 50 basis points. Then such an action was considered as a signal of a slower interest rate hike by the Fed Reserve. In this light, traders were actively selling off the greenback. But now the market has come down and resolved doubts about the Fed's decisiveness. That's why now traders are reacting to the smaller than expected rise in the Reserve Bank of Australia's key interest rate by the sell-off of the Australian dollar. However, the situation may change dramatically amid news from China. Thus, the main consumer of Australia's raw materials is going to unveil its industrial production report. Signs of a rise after the coronavirus pandemic and quarantine measures will have a positive effect on Australia's national currency. In addition, news about a faster economic growth may also boost appetite for risk assets. Notably, in the second quarter, China's economy showed the slowest rate since the first quarter of 2020, when Wuhan faced the first outbreak of COVID-19. According to the forecast, in the third quarter, GDP may advance by 3.5% on a yearly basis, despite the negative influence of a new virus cases and stagflation risks in the global economy. But such data may encourage traders to switch to riskier assets. However, news flow from Europe will remind traders about the negative trends in the global economy. Thus, economic sentiment in the Eurozone's largest economy continues falling. ZEF experts found out that in September, the indicator that reflects sentiment among German entrepreneurs slumped to the lowest level since October 2008 amid a drop in China's industrial production. However, in October, the economic sentiment is likely to be even gloomier due to the energy crisis aggravation caused by the upcoming winter. What's more, extremely high inflation and the necessity to raise the benchmark rate are also adding fuel to the situation. By the way, in September, the Eurozone inflation accelerated to a two-digit level of 10%. On a Wednesday, all eyes will be turned to the final report, which is expected to meet preliminary estimates. Notably, a 10% inflation is an absolute record for the region. In the United Kingdom, the economic situation is also alarming. The number of insolvent companies is rising every day and has already approached the level recorded in 2009. The Bank of England is trying to settle the issue by raising the benchmark rate rapidly. However, it still has to increase the volume of the quantitative easing program in order to maintain the UK financial system stability. On a Wednesday, the UK will disclose its fresh inflation figures. Analysts refrain from making predictions, thus causing numerous concerns. Only Canada will provide data that will boost trading activity. The fact is that Canada's inflation is the lowest among the largest economies. What's more, in September, the indicator is likely to drop even more. Against this backdrop, the Canadian dollar is expected to gain in value. You have watched the Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable trading and waiting for you on our channel with a new video. See you soon!